You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the Option Block, a little program around here where we like to do a lot of fun things for you guys, the active options trader. We do a little bit of breaking down of what's trading. We analyze a lot of unusual activity. We get into your questions. We get into some in-depth strategy analysis. We peer ahead into the future. We do all that fun stuff. We mix it all together. You have the heady brew that is the Option Block. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-captivating Options Insider Radio Network. Where can you find all that goodness? Well, you can come to our studios here in scenic and sunny, very warm this time of year, and also, of course, celebrating Chicago here, where everyone's excited about the Cubs winning. You can see it. You can't miss it as you walk down the street here. Every window, every billboard, every building is lit up blue. There's C's and W's in all the windows. It's crazy town. Just wait until the parade, which I believe is going to be tomorrow. So that should be fairly interesting. But, of course, the easiest place to find our stuff, in addition to just coming all the way to Chicago, is, of course, the mothership, theoptionsinsider.com. While you're there, make sure you check out, if you like unusual activity, we've got a lot of it on the site throughout the day, as well as breaking news from the options market. Analysis, education, breakdowns, market share, all that fun stuff that goes up on the site every day, 5 days a week, and a little bit of fun stuff on the weekends as well. And of course, when you're ready to begin your audio journey, iTunes, TuneIn, Stitcher, so on and so forth. You can get our whole network feed. Probably the easiest way to just get everything. Again, that's a lot of content you're getting, but it'll give you everything we put out, which is a fair amount. We'll keep you busy. Don't worry. Or you can select and subscribe to your independent favorite shows. If you say, I want to go only pick the shows without the Rock Lobster on, luckily, we got a few for you guys to choose from. I think out of the 15, I think we still have about 12 or so that he is not on, 12 or 13. So you'll be easy there. And Tosaw, same thing. It's about 13 or 14 that he's not on. So it makes it easy for you guys to pick your favorites. And don't worry, it's a bunch without me, too, if you don't like me. So go have at it. Pick your poison. And again, you can also find us in the app stores, iOS, Android, and indeed the beloved Fire OS. And however you listen, whomever you like or don't like, make sure you hit us up with those questions, those comments, those insights. We'd love to hear from you guys. You can always join us as well, at least for this program, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr, or you can just grab the link if you follow us on social media, and we'll put it out there right before the showtime, every time on Stock Twits as well, so you can't miss it. Or just grab it once, bookmark it, or just follow us in the Mixlr service. That's the easiest way to notify the instant we go live. Or just remember that in your brain, 3 p.m. Central, 4 p.m. Eastern, every Monday and Thursday. And speaking of he who shall be not be named, unfortunately I have to name him because he's coming on the show now. He is the Rock Lobster himself, Mr. Andrew Giovinazzi from Parts Unknown, a.k.a. Maine. Mr. Rock Lobster, welcome back to the program, and enjoy your umbrage, sir.
I don't have a lot of umbrage. I mean, my only umbrage was when I almost jumped out of my sofa last night when he pulled Hendricks. But apparently the manager knows more than I do. I was freaking out a little bit, though. When he
I think you and all of Chicago collectively freaking out.
That guy had their number.
And then they put the new guy in, and the new catcher, and they instantly give up 2 runs. And everyone's like, "This is the worst manager ever."
And then they pulled Lester when he had all his heat back. Like, he did it twice. I'm like, "Oh my gosh, this is not going to end well." But he knew it all along. So, who am I to say? I'm taking nothing away because The manager brought him there, and it was awesome. But you know what he decided? He's like, I'm just going to give everybody just a little extra heart attack that's a Cubs fan. Just a little extra one. I'm just going to give him a little extra.
It's no fun. It doesn't seem like a Cubs World Series victory if it isn't pulled from the ravenous jaws of defeat multiple times in the same game. If it wasn't...
5-1? Who wants a 5-1 victory? I'm going to make it close.
Yeah, when they were winning like 5-1 or 6-3, I just said this doesn't feel like a Cubs win. It needs to be far more dramatic than this. And sure enough, they obliged in very epic fashion. So yeah, crazy stuff. Obviously, Chicago productivity kind of grinding to a standstill here in the city. I talked to our greasy meatball friend earlier. He was kind of still in a Cubs haze, wandering around Wrigleyville. So he's still soaking it all in. Let's move a little bit farther afield, or a little closer to home, I should say. Actually, farther afield for you, Mr. Rock Lobster, to the land known as St. Charles, Illinois, where we are joined by Uncle Mike Tosaw. Uncle Mike, first off, A, did you watch the game? And B, what's new in your neck of the woods?
Oh, it was a very, I'm not much of a baseball fan, but I grew up, baseball was always my first love before I realized that as a pitcher, I couldn't even hit the backstop. And then I quickly realized football was more my game. But as a kid, I watched so many years of heartache. I remember specifically the 87 Cubs. Andre Dawson came to town, and that was going to be their year. I was in, I think, 4th grade at the time, and I was so excited that year. And then they came out to a first place start in May, and then they proceeded to go to last place. And then year after year after year of heartache as a kid, then finally I could. Well, every Cub fan story, it's filled with heartache. But then last night was just a sweet night, and you know it was a very joyous night for me. I loved I loved it, and you're right, got to have some dramatic in that.
Yeah, it was pretty crazy. I'm with you. I've never been the biggest of baseball fans, but even that game was. If all baseball was like that, hey, I would watch it more often. It would be actually compelling. But that said, I promise you, not too much, maybe a little bit more, not too much more Cubs talk, because this is the time of year you want to be in sports talk radio. A lot to talk about. To keep people guessing, certainly for many months into the offseason as they debate those coaching choices. But instead, we'll keep on rolling to debate some options trading right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Surprisingly, the markets did open again today, even though no one in Chicago was trading them, at least no one on the north side. Maybe some people on the south side were actively trading. And, of course, maybe just in the post-Cubs shock/euphoria. I know a couple weeks ago on VolViews, we did chat with Russell. He wrote a piece about how the Cubs winning would impact the VIX. I'm not sure if he wrote it up this way, which is VIX cash rally ho, up another 3 handles to 22, about 22.5. Let's see, what was the intraday high here for VIX? About 22.5, a little higher, 22.57. So, yeah, well beyond what all of us thought was the most optimistic. Most of us thought the 18 we had in our poll earlier this week was the most optimistic things could get. And, of course, blew by that. Speaking of our poll, we'll get to that a little bit later. But 3 of the 4 things we said were very unlikely have already come to pass. So I guess we'll be tabling that poll for the rest of that week. But, of course, the rest of the market selling off, helping to give VIX that nice little pop. S&P off about 0.5%. Tech-heavy NASDAQ off a full percentage point, and the Dow, the laggard of the two, at least to the downside, off about 0.25 percentage point or so. So, Uncle Mike, I think we'll start in your neck of the woods. Still are some earnings popping off this week and some interesting stuff. We got some names coming out after the bell. We'll get to those in a little bit. But before we do that, what was catching your eye in today's activity, sir, Uncle Mike?
Well, of course, Facebook. I mean, there's the debate right now. Is Facebook a buying opportunity or is it a time to just stay? Is this kind of a sign of things to come to stay away from Facebook, so to speak? Gold is continuing to rally quietly throughout all of this. That's definitely on the radar. And of course, and Andrew's going to talk more about this. I'm not going to steal too much of his thunder anyway, but the fact that the VIX is 10% above where we said it would be a long shot for it to be, that's got to be the biggest thing that's out there today. And the other thing, of course, is the S&P is down. I believe it's 8 days in a row now, and we have not had that happen since 2008. So this is an area to where I remember talking about this when SPX was knocking on the door of 2200, and it never really got through there. So if you want to there's a time to wait to really jump on the bull train, and hopefully a lot of our listeners waited until they really started putting a lot of money to work into the market, because obviously we've had a pullback this last week and a half. The other thing that I think we can also mention, my beloved fruit company, which I don't really trade a lot of anymore, but still enjoy watching. What the heck? It's a life-changing stock. I can't help but watch it. Apple down below the 110 mark. Still not calling upon it as a buying opportunity by any means, but it's still, it might be pretty soon the way it's going. And by pretty soon, I mean, it would need to go down to maybe like the 80 or 70 level, but we will see. The last thing that did catch my eye today was XLE. And XLE got the tar beat out of it the last couple days, but today it was actually up a little bit. So a lot going on today, and overall, I am just going to be in a very cautious mode until we actually get to this election and get some type of certainty, or more certain uncertainty, if that made any sense at all.
I was going to say, buying opportunity for you is a little, in Apple is a little bit close, is a little bit. I guess depends on your viewpoint, because you like it down. I think that mid 70 handle or so is where you need it to be. So not anywhere in the plus 100 level where it is right now. Another 30 to 40 handles, and suddenly it's a buying opportunity for Uncle Mike.
It's getting there.
Well, it's when it's just worth what the cash in the bank is. Then he's like, okay, I'll buy that.
Then he's all aboard. Then he's jumping on.
Which
then
is
I'm all in.
I think you got to be all in there for sure.
Right. And Mr. Rock Lobster, obviously a hot week in the pit chat. A lot of names popping off. A lot of interesting things moving. Obviously, VIX Cash, as we alluded to earlier, also moving quite a bit this week. I think perhaps surprising all of us with its speed and ferocity and volatility to the upside this week. So what's been catching your eye in today's and indeed this week's activity?
Yes, definitely. What's, I guess, for listeners that really want to understand volatility, all the volatility is centered around November 9th series in the SPX. I think the at the money vol there is 30% now. The at the money straddle is like $56. And the thing is, you think of it like a rubber band. The farther the market goes down, gets, we were paying what, 21.50, and everybody was, there was GDP was okay. There was some good earnings. There was like a little bit of Hillary was going to win. Everybody had happy feelings, at least in bet percentage. And then as we started sliding, right, that 21.50 becomes a magnet for an expected outcome. But now, we're 60 handles away from that. So if what we thought was going to happen, as in, the Hillary win and we had status quo and supposedly everything's supposed to be great, then the market snaps back up there, that's a 2% move. In order to make that happen, the volatility for that strike is just going to the moon. And as we have heard earlier, the volatility constellation, or the term structure, it pulls all the vol up. I thought when I calculated like 20 would be the high, and that we wouldn't get to that till Monday. But wow, was I off? Because we keep going down. Since we keep going down, that's stretching the potential straddle, and the expected move is getting bigger and bigger. So mostly in the pit, option pit, we just try to stay along a little vol. We've been piecing it out over the week, trying not to do anything too stupid, because I think you want to be set up for a really good opportunity come, Monday, Tuesday, Wednesday. If you blow out selling vol up now, because you sell it now, it's not going down. Okay, mathematically, it's not going down, which is why it's going up. So you gotta get out of the way. Now we could have a shock that changes everything, and that's I think the one wild card. But it doesn't look like, I think we got to kind of like, this is beginning to be a lot like the Cubs World Series. We got to wait till it's over until we know what's going to happen. So, and even then it might not be over if it's a bunch of there's a bunch of goofiness, but I don't really think that's going to happen, but it could. And I think that's the story for vol. And I don't think the Facebook earnings really helped everybody either. They blew the doors out. If they're starting to make $1 a share, it's a 25 25 times multiple company, which is still pretty high, but it's not bad considering that they're still breakneck growth. I'm kind of feeling they're doing what Google usually does, where basically once a year they say, okay, we're going to increase our spending so we can make more money later, and we're not really sure we're going to make a lot of money this year, but we're going to make some money. And then a year later, they're totally blowing the doors off. So it feels like they're kind of taking a play. Google obviously is hugely successful, so it feels like they're taking a play from that playbook. So, Facebook gets ugly. Maybe it gets a little uglier into, next week to the election, and it's probably a scoop again, just based on the fact that, unlike the fruit company, Facebook's earnings are growing. They did freak everybody out a little bit about the news feed, though. They're saying, they jammed about as many ads as they can in the news feed. I don't know. I look at my news feed. They could probably jam a few more, or find other ways to monetize what they got. So who knows? But that seems to be the story today. So again, the sky's the limit for VIX at this point. I have just, I would be surprised. I would be hugely surprised if it was higher on let's say the 9th or the 10th. I would be hugely surprised if it's higher than where it is right now, though. I don't see that, but could be wrong.
Yeah, a lot to break down. Let's get to it really quick because it has been an interesting way. I like that. You're probably the lone voice in the wilderness out there for more ads in the news feed there, sir. So I like that. Only a trader, only an investor in Facebook would say such a thing, such heresy. But there have been, let's start off with Facebook. That came out, of course, yesterday, and it was a hotly debated topic. It is kind of funny to hear you say that, Uncle Mike, because I remember not that long ago on the show, after the Facebook IPO, and we were debating whether those 30 puts, people were writing into us asking, the time was about 35 or so, and saying, oh, those 30 puts safe sales? I don't know. And here we are now saying, is Facebook at 119? Is that potentially a buying opportunity? So the worm has certainly turned on Facebook, at least in the outlook. Not so much in the market, of course, where this name taking it on the chin. They closed yesterday 127.17. They were pricing in about a $6.70 straddle. They opened up down about 5.17 or so. And then today, trading down as low as about 7.5. And then, so an interesting development there. And of course, that straddle, again, we had that in our survey where they outperformed their $6, and actually the time was a little more, it was like 7 something. And either way, whichever way you priced it, they did outperform. Not in the initial move, but in the net move. We'll count that. We'll let that count. And then, of course, over there to Baba as well, also popping off a Wednesday. They were before the bell. And they closed about 101.15 on Tuesday night. They were pricing in about a $5.50 straddle. They opened up about 265 and ended up the day trading up about as high as nearly $3, but underperforming from an overall perspective. And today closing off down about 76 cents on the day, so 97.75 down to the south. So after getting all that love, taking it on the chin today here on the street. And of course, after hours today, we have my old friend Starbucks, SBUX, of course, popping off after the close. They were hovering around 52, I should say, today. Closed around 51.77. They're off about $1.20 or a little over 2% actually in today's activity. They're pricing in about a $2.50 straddle, so right around a little bit less than 5%. And so far in the after hours, they were vacillating around a little bit. Right now, they're up about $1.75, so about 3.3 or so percent, trading around 53.5 right now. So still underperforming, but not a bad little move. We'll see if that rally continues. We'll keep an eye on that. Also, it is that time of the month, so we should hit on this really quickly. Not that other time of the month, but the options time of the month, where the numbers are out beginning of November. So we look back on the month that was October of this year, and October, not exactly a banner month for all things options, according to our friends over there at the OCC, the Options Clearing Corporation. They said their cleared contract volume, again, they're, of course, the counterparty to all of your listed options trades, so they should know. And they Overall volume was 318.4 million contracts. That's 13% decrease from October of last year. October of last year had some stuff going on, so that certainly contributed to it. And this year, even though we like to call it Rocktober, it wasn't the rockingest of Tobers. In fact, a lot of weeks we were talking about pretty anemic volume, and obviously that aggregated into not a heck of a lot. ADV overall at the OCC down 3% year to date with about 16.3 million contracts. Getting deeper, OCC clears a lot of stuff, not just options. Digging into the listed options, about a 309, near 310 million contracts last month. That was a 15% decrease from October of last year. Year-to-date listed equity options volume, actually year-to-date listed volume down 4%. Equity options, so you break it down even farther, about 279 million contracts, a 14% decrease from last year. If you break down ETF options, they were down about 10% from last October, and index options are down 20% from last October. So not a banner month, no matter how you slice it. Before I roll on into the odd block, anything Mr. Rock Lobster or Uncle Mike on either of those numbers, or more on Facebook or Baba or Starbucks, now is the time, sirs. Have at it.
I mean, I wish I had something, but I think I said my piece. Now that I got everybody mad for wanting more ads in the feed, I don't know where do you go from there? Yeah,
they let the hate mail pour in. Andrew at optionpit.com if you want to let him know what you think about his request for more ads. As we keep on rolling into our next segment, it's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. Welcome to the Odd Block. I have to say this, Mr. Rock Lobster. You know it's a Chicago school my little guy goes to when they wrote out, sent a newsletter just now, absences will not be counted tomorrow if you do indeed want to attend the parade. See, that's a good Chicago school, you know, you're going to there. All right, moving on to the actual Odd Block for today. This is, of course, a portion of the show where we talk more than just about the Cubs. We talk about all the dark, the dangerous, the weird, the wild activity we saw lighting it up on the old street from an options perspective today. Gonna start things off. One of my favorite tickers. We talked about this in the past. It's been a while, though. This is Itau Unibanco Holding SA. It's an ADR in case you couldn't figure out from the name. And ticker symbol, ITUB. I just love that name. Of course, closing today, pretty much unched on the day, $11.27. And again, this is the name that does not bad paper from an options, or excuse me, odd block perspective. About 1,600 contracts a day, doing a little more than 2x that today, doing nearly 4,000 contracts, about 3-to-1 calls over puts. That should give you some little inkling of what we saw out here today, listeners. In particular, it was the ITUB November 12 calls that were lighting it up to the tune of 1,000, which is pretty much almost 2/3 of their ADV in that one trade. Paper gobbling them up for a whopping 25 cents, going up in one block over there on the Philly as a sweep. Again, we looked around, we dug, didn't see any stock, no open interest really to speak of on this strike. There's a couple hundred contracts, so not a ton going up there. It should be worth noting that also 600 of the puts went up on that same strike. It couldn't probably be related to this customer activity, maybe some market makers looking to take some stuff off on that strike, or it could be other activity. Regardless, no open interest on that side as well. But it looks like at least the initial kind that we profiled here is what appears to be on the surface, a straight up outright upside buy here in ITUB. And going back here, let's look back over the past year at all things ITUB. And this thing has been on a bit of a tear, certainly since the market doldrums of January, February, when it was trading in the $4 range. So it's over 2x increase, coming up on close to 3 when it hits this $12 range or so. And apparently, at least for our friends out here, Mr. Rock Lobster, who decided to buy some 12 calls, that's not enough. A nearly 3x increase since February is not enough. They say beyond the 12 handle is what they're looking for. And they want it pretty quick. They want it by November 18th. So what's your take here on someone, I wouldn't say swinging for the fences, but swinging for a nice, aggressive double/triple here in ITUB?
Well, every time there's activity in it, I put it in just for you because I like hearing you just try to pronounce the bank's name.
I love ITUB. ITUB's my favorite.
You like it, so I have to put it in. This is kind of like a semi-pitchette. You know, the dead bottom for the Brazil was, I think it was a year ago or something around there, when they had the whole Dilma scandal, you know, with Petrobras and all that, and S&P downgraded Brazil. And I think the EWZ, or ITUB, was probably trading $3. The whole Brazilian stock market was totally in the ash can, right? I think the EWZ was trading for $17, and S&P downgraded their debt. And literally to the day, that was probably the dead bottom for. So if you guys want a great contra indicator, just wait till the S&P 500 downgrade your country, because it's a pretty good buying signal. Their timing on the U.S. was pretty good too, even though actually I really didn't disagree with them on that one, but still. Either way, so yes, I think, and there's a lot of paper bidding up a lot of kind of Latin America, especially Mexico. Apparently if Trump wins, that's going to be really bad for Mexico. So there's paper there too, but more kind of parabolic moves. And, the reason why he's swinging for the fences is he's buying November. The regular November cycle holds the election. So if you're going to get a move, if you're going to get a big bump, that's when it's going to happen. So, again, they're betting on the right cycle if they want some action. And the price is right. It's only a quarter.
What's a quarter 1,000 times amongst friends, right?
Nothing. It's nothing. $25,000. Who cares?
That's why it's not really swinging for the fences. It's a nice double. It's more than a bunt. It's a little less than swinging for the fences to keep with our baseball metaphor alive. If you like baseball, you probably play a little bit of some of those MLB games and stuff. So you know our next name. That is Electronic Arts EA, makers of and purveyors of many, many fine video games out there. Of course, ticker symbol EA. Closing today, $80.52. Up about 1.5% or nearly 2% on the day. It's a name that does decent volume, about 9,400 contracts a day, doing a little bit more than that. 70,645 to be precise. So a wee bit more paper than usual, although not as one-sided as you might think. It's pretty much evenly split amongst calls and puts. So this thing was just lighting it up. Of course, we are a few days removed here from earnings and still perhaps basking in that afterglow of earnings activity out here in EA. And what caught our eye was a pretty sizable put fly going up out here. I'm talking about many put flies here in the odd block, so that's interesting in and of itself, and a very near-term one as well. It was the Nove Weekly, so expiring on the 4th, so tomorrow. 77, 79.5, 82 put fly going up net for $1.03. Looks like paper coming back in to buy about 7,700 of these Nove 82 puts, Nove on the 4th, remember the weeklies, and then selling about 15,000 total of nearly 18,000 on the day of these Nove 79 half puts. That latter paper may not be related because the fly went up about 7,500 by 15,000 by 7,500 again on the 77 puts. Looking at the open interest, there is a ton on each of these strikes, and it lines up pretty nicely with the numbers on this fly, if not maybe a little bit more. There's about 10,000 on the 82 puts, about 15, nearly 16,000 on the 79 halves, and about 10,000 on the 77 strike. So kind of interesting. The buying on the 82 puts, they lifted the offer pretty aggressively, so that's usually a good sign that they had to get the heck out of Dodge, and they're closing some open interest that they already have. It is kind of weird to see them taking it off in this manner at this time. It is a little better than it has. The stock's gapped up. It was hovering around that 79.5 strike not that long ago. So a little bit of this move maybe making it a little bit easier for them to buy this sucker back. About a handle or about $1.50 almost today rally. So that helps certainly. So that could certainly be it. But still interesting one. I know Mr. Rock Lobster's one kind of had you scratching your head, and there was a ton of paper going up out here today too. Nearly 11,000 of the Nove Weekly 80 calls. So people unwinding, it seems like, a lot of earnings paper, including our friend out here on the fly. Let's do a really quick check here on EA. I know you love your gaming sector. And this name has been vacillating around quite a bit as well. Also hitting its nadir back in that Jan-Feb timeframe, right around, looks like the 54 or so level, before slowly making its way back to where it is now in the right about in the mid-80s or so, until earnings this week, when it kind of got clipped down to about 77, now settling out around 80 or so. So, Mr. Rock Lobster, what you take here on our friend probably closing out a fairly sizable fly in the weeklies, a put fly in EA?
Also, look at where the put fly's around, right? Because EA's trading for just a little under 82, and they had the 82, 79 and a half. What was it, 77 fly? I think they sold it to open, which is really weird. Like, so they kind of want the back spread. I don't know what they got for it. Maybe the price was good, but I mean, they're closing it on an up day. It was probably an earnings fly. It was a big Gazzo Zilcho when they, after earnings, and then they got the $2 move to the a lot closer to the long strike. So I think they might have been able to squeak something out of the trade, but kind of odd to see one of those, basically you're long the guts and short the wings type of fly, which is a short. It would be a long iron butterfly or a short standard fly. But I think they needed the rally today to make it happen, because nothing happened on the earnings date. It hung right around the long strike. So I have to imagine that was a painful death for their fly, and then it kind of woke up. So
yeah, that's literally the worst thing you could have happen when you're long all those guts, and it's just sitting there right at your strike, just kind of mocking you as it erodes very quickly in your face. I can just feel that guy's pain remotely right now. I've been there. You've been there. Everyone's been there.
Exactly. I know. You know that look. You're like, okay, I lost another 1,000. There's another minute. Lost another 1,000.
I'm going to go to Ceres and spend the rest of my morning over there, because that's the least more fun.
Exactly. I'm going to Ceres, and I'm having a Bloody Mary, and I'm having breakfast, and hope this all goes away.
Yeah, I can always tell my guys who were hung on something, either hung on deltas or they had something just in their face and it would not budge. And that was because they were at Ceres doing all sorts of deleterious things to their health and hoping their position would magically right itself. So yeah, we've all been there, feeling that pain. And our friend here taking advantage of a nice little pop today to A, get away from his long strike, which I'm sure he was happy about, and B, probably take it off for a little bit better level than he would have gotten yesterday. That's for sure. All right, moving on to our final name here, our final victim. This is not one we usually will profile here in the odd block, because these big names trying to profile any individual activity is kind of like spitting into a hurricane, and you're talking VIX and all these other names like that. And Qs certainly fall into that category as well. Of course, ticker symbol QQQ. Closing today 114.05, off about 1.13, about 1%. On the day. It's the name that, as you might imagine, does some paper. About 385,000 contracts a day or so that it's averaging right now, hitting nearly 500,000, just a few ticks below it today. So pretty sizable paper, no matter how you break it down here today. So finding our strike du jour for you guys may be a little bit challenging. We picked a little bit easier one for you guys to spot on your own today, because it was fairly sizable even for the Qs in terms of one strike activity. Scroll on down to Dees, and it should pop off your screen, listeners. It was the Dees 125 calls going up for a wee bit of size. Started off in 2 blocks on the SIBO paper buying for a whole nickel. 43,600 of these bad boys. The day ends with about 47,000 and some change going up. You might say, hey, big deal, they're closing out something for a nickel, but there's no open interest. There's only 5,700 contracts. So somebody decided to come in today in the Qs and open up nearly 50,000 upside Dees 125 calls. This guy, we didn't see any. I mean, it's kind of hard to parse some of the underlying and Qs, obviously. So that's a little bit more of a challenging thing. And obviously, he probably has something else on. But that said, this leg of it, looks to be someone who's drinking this leg at least is drinking the Kool-Aid in terms of wanting a nice rally, as we termed, I believe, on the site, a nice Santa hat rally out there in the NASDAQ, and he's not waiting too long for it to do. Expecting it to come by December. And, we have been flirting with levels that weren't too far away. I think we got to about when we were flirting with those all-time highs out there, and then the NASDAQ recently, the Qs hitting about 119.5 or so, 119.60. So they weren't too far off the 120 handle. They never flirted with 125. But our friend here deciding, you know what? I'm a fan here. I want this upside in the Qs, and I want it about 50,000 times. Mr. Rock Lobster, take us home. What are your thoughts here on our friend? He's drinking the Kool-Aid, and he's drinking it about 50,000 times here in the Qs.
Well, what's funny is because you said we normally don't, we don't really parse SPY or EEM or VIX or anything like that because the volume is so huge. But I mean, I got to even ask Tosaw, how do you not get what this guy's trying to do? if he's shorting Q massively, which is possible, why would you buy the 10 handle out of the money calls to hedge your short? I guess, for a margin call or something, I could see that, but oh my gosh. So
that's probably the only thing that I could think of. Unless he has a risk manager that has some type of algorithm that says you are not allowed to have more than X amount of possible risk, then that's the only thing.
Yeah, and you got to cut the top off. But you're already down 10 handles on your what is it, 5 million shares? So that kind of sucks. Well, at least I can't lose any more. So anyway, I think the Qs weren't trading close to 120. I still think the Qs are still gonna be the outperformer of the year over everything else. Maybe save the bounce back in some of the oils and things like that, but it feels like there's people, this sell-off is people are selling their good stuff. They're selling their Google. Google's down $50 from earnings, Google L. They're selling Apple, which has put in us, revenue growth definitely with negative, but they're still making tons of money. They sold some Facebook. Microsoft has pulled back a little bit from earnings, but not much. Amazon pulled back a little bit on not great earnings. I guess we have Cisco's the last one. So, the Q leaders, Oracle doing okay, a lot of other Qualcomm doing great. So all the big Q stocks are actually turning in pretty decent years. And, now they're off their highs a little bit. And I think, it's like I was seeing some of the other paper. You got a lot of this kind of parabolic paper where people are a lot smarter how they buy options. They're like, I'm not going to buy a bunch of junky out of the money calls just when something's normal's happening. I'm going to buy junky out of the money calls when the market rubber band is being stretched really hard. I have 6 or so weeks, 7, 8 weeks for these calls to come to fruition. And even if we get a quick run back to 120, maybe I could sell these calls for a nickel, back out of 15 or 20 cents, which would be still would be a great trade. So, that's, when the market does things like this, I try to look for, and I want to see if there's more paper looking for more, larger moves. And this clearly, I think, is one of those. So, and I know it sounds crazy, but because you're getting kind of the stretching going on from the election, this type of trade, which I never would have, which normally you would say, no, it doesn't really have a shot, 10% out of the money or something like that. There's no way. It definitely, you could get a 5-handle move pretty easily, and that would make those calls worth more money. So it's not as crazy as it would seem on the outset.
Junky out of the money calls. I love when you throw the technical terms around here for our audience, sir.
I'm known for those.
It's deep and insightful technical terms. All right, well done, sir. Now it's time for us to keep on rolling. It's Thursday. It's time for Uncle Mike to put on his talking pants because it's time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the strategy block.
All right, everybody, it's Thursday. It means it's time for Uncle Mike to hold court here on the old show to dispense some options, wit, and or wisdom. I got a feeling today's category is going to fall into the latter. My minions are a bit Cubs fans, so they were a little bit, shall we say, overindulging on the jams and jellies last night. So getting any coherent words out of them on any given day is a challenge. Today, perhaps a little more so. But they kept saying something about manage. I think they're saying management. So I'm trying to figure out maybe it's risk management or money management. And they kept pointing to the little guy and then to the big guy. So I think they were saying something about size. So management, maybe you're going to talk about how to manage a Wendy's and the size of the Happy Meal that you should order, maybe. So I don't know, Uncle Mike. That's kind of all I can get out of them. Were they even anywhere close to the ballpark? Pun intended.
They are, and you know they were wise to tell you that I got my talking pants on today because I try not to talk without them.
Yeah, I know it's hard for you walking and talking at the same time without pants.
There you go. So, anyway, what I want to go through today, folks, is kind of a way with which to use money management in your favor. What I mean by that is it is very possible to make 100 trades, be correct on 99 of them, and still be a losing trader. So the important part that I want to emphasize today is how you can manage your money to prevent that from happening. Because oftentimes when people are attracted to I'm doing air quotes now, everybody, since you can't see me, high probability trades, they oftentimes take the drug of hopium and believe that, oh, this trade has a 90% probability. And somewhere between their ears and their brain, they think it translates from 90% probability to can't lose. Because I've seen many people do 90% probability trades. And even I'm typically not a huge fan of probabilities, but I would even say, okay, going into it, yeah, it probably would be a 90% probability. And then they lose not only their shirts, but their talking pants as well. And they feel that, well, how is this possible? It was a 90% probability trade. Why is this happening to me? So I want to go through today a way to manage money, whether you're doing a low probability trade or a high probability trade, and a way to set up a plan to help you through this. Now, I'm just going to do this with a stock, and you can use this. I think the first example I'm going to be used can really be applied towards short credit spreads or short spreads. But I'm just going to use, for sake of simplicity today, to go through the concept of it, how this can be done with stocks. Now, let's say that you want to buy a stock, and you want to buy the stock at 100, and you want to make $30 on it. And you want to do it based upon buying 300 shares. So in other words, you think the stock's going to go from 100 to 110, and you're going to buy 300 shares of it. Now, here's the issue with which you run into. If the stock goes up, I know it's very easy. I put in my buy when it's at 100. I put in my limit order to sell when it's at 110. That part's easy. The problem is how much do I risk? Well, of course, there's one school of thought to where you can just let it sit there forever and eventually hope that it goes to 110, which is, that's kind of what I'm doing right now with XLE, so I don't have any problem with that. But let's say that you're kind of concerned that you think that this stock could actually go up to your 110 mark, possibly even higher, but you just don't know where to put the stop loss in. Well, this is something that I want to go through today. Just a thought. It may or may not work for you, but just food for thought in terms of how to manage a trade. You're buying 300 shares of it, and you're looking for it to go up from 100 to 110. Now, these numbers are arbitrary in terms of where you should put in your stop loss, why you would do it, that type of thing. But what I want to go through today is how you can actually do this to a point to where it can work for you, and maybe you can kind of translate these numbers a little bit into your own trading plan. So, all right, so XYZ stock's at 100. We buy our 300 shares of it. We have our profit target in at 110. So we bought in at 100. We're going to put in an OCO order. One cancels other order. The profit target's going to be to sell at 110, all 300 shares. If we get there, we are happy. Now, where do we put the stop loss in? This is an area with which I think is underused in the retail trading community. One way with which to do it is you can say, okay, why don't we just put our stop loss in at $90? I'm willing to risk 10 to make 10. And I think that's actually a very logical solution. However, let's say that you know in your head, after going through Andrew and Mark's classes, after doing a few trades yourself, you know that you're going to have a hard time selling it at 90 because of the fact that you still like the stock. In fact, you might even want to consider buying more at 90. Who knows? But that's an area with which you might want to, you have a hard time selling it. Now, I'm personally of the school of thought to where I try, it's never perfect, especially when you're trading spreads and options. I don't like to risk more than what I'm trying to make. So for example, if I'm looking to make 50 cents on a short spread, when that spread's against me by 50 cents, I usually tend to get out of it or roll it or do something to where I'm stopping the bleeding. So with that, what's a way with which we can possibly have the stock go below 90 and still be in it? Well, here's an area with which to consider. For the downside on 200 of the 300 shares, put in your stop loss at 97. Right there, you're out $6. 3 plus 3 is 6. And with that, you're out of a bunch of them right away. Now, of course, what's going to happen is as soon as you get out at 97, stock's going to shoot right up. Well, if that's the case, then yeah, that's kind of a bad deal, and it's kind of hurts because of the fact that you're thinking, well, wow, I shouldn't have got out so close. But one thing that you may want to do is you can put in a 1x2 stock repair strategy. If it starts to hit 100, you can maybe create some double leverage by using an option strategy. There's things that we talk about in the strategy block all the time. There's ways with which to do that, but what you have the ability to do by having the stop loss is you can have more risk below 90, which I'll talk about in a second. So let's say the stock is at 97, you get out of 200 of the 300 shares, and the stock continues to go down. Stock's at 90 now. And normally you're thinking, oh, wow, this is where I'd normally be getting out of everything, but you can stay on the ride a little bit longer because you got out of 2/3 of the ride before. In fact, if you want to have the risk 10 to make 10 mentality, you can ride this stock all the way down to, in this case, excuse me, you can ride this stock all the way down to around 70 a share because of the fact, around 76 per share. Because by doing that, yes, you're riding it down quite a bit, but you're only riding it down on a smaller amount of shares. At that stage, maybe it's easier to sell it thinking, wow, I was really wrong on this bonehead stock. You get out of it and you've risked 10 to potentially make 10. Now, at that stage, you can actually hold on a little bit longer because let's say at 84, the stock turns around and that's the point where it goes up. Then you can ride the stock back up, and then at 110, maybe do some type of an option enhancement strategy of some sort and make a pretty decent profit that way. Food for thought on how to do this, but the main takeaway that I want you to have with this is that you have the ability to create wider stop losses to where you know you're not going to get chopped out, so to speak, and you'll still have a chance to be in it, but you need to trade with different units, so to speak, meaning that let's say you have 300 shares on the table, be really tight with a couple of them, but then you can be a little bit looser with another one and manage risk that way. Final thing that I want to go through today in terms of money management is my rule of 10. And I've talked about this on the show today, but I've talked about this on the show in the past, but I want to go through it a little bit today because I think it can apply to this. Oftentimes when people take the drug hopium, they'll see, wow, I could make 20% on this trade. And it's a 90% probability trade. How can I lose? Well, of course, when you do lose on the 10% of the time, possibly more, then you lose 80%, and then you fall into that category I mentioned at the beginning of the strategy block where you make 99 winning trades, and on trade 100, you blow it all and then some. I like to look, if you're looking at a trading plan, the way I like to look at is the rule of 10. And if it doesn't, there's things that I'll do past the rule of 10, but if it doesn't pass my rule of 10, then it's not even worth thinking about. I look at a trade and say, okay, what's the most I can possibly make on this trade? And let's say that I can make 10% on the trade. And okay, on this trade, how much can I lose on the trade? Well, I can lose maybe 10% on this trade. That's at this stage I will lose. Well, with that being said, let's say that you're right 50% of the time. Well, if you're right 50% of the time and you're not doing any scaling or anything like that, you either make 10% or lose 10%, then you're going to break even after 10 trades, commission not factored in. So you know that that's a break-even trading strategy that you've just come up with. Now, let's say you find a strategy to where you tweak it a little bit, then maybe you buy at a different point, you use a different option strategy, whatever the case may be, to where you're right 60% of the time. Well, you know, if that's the case, then if you're right 60% of the time and you're wrong 40% of the time, then you know that after 10 trades, you're going to be up roughly 20%. Your money won't double by then, but you're going to be up roughly 20% because you're right 6, you're wrong 4. That comes out to positive 2. And that's where you're going to be after 10 trades. And if you have the thought that you're going to be right every time, then that's going to lead to some problems. The rule of 10 is something that I like to use to kind of give myself an idea of whether it makes sense to delve down the idea of the strategy that I'm considering. And then if that works, then I'll analyze it further. But that's usually the first test for me, whether it's for hedging, whether it's for speculation, whatever the case may be. So that is the strategy block for today. Hopefully you guys learned a lot from it. And stay tuned for next week, where not only will I have my talking pants on, I'm putting on the talking shirt.
Uh-oh. That might have to schedule 40 minutes for the strategy block if you got the pants and the shirt on. Thank you for that, Uncle Mike. And now we're going to keep on rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block, of course, a portion of the show. We tell you what we're keeping an eye on for the rest of this week into the old weekend. A really quick check back in on some of our names you're looking at earlier today, like Starbucks coming out after the bell. They were rallying up to around 53.5 or so. Now they're giving up much of that upside, up about 50 odd cents or so, or a little over 1% now. So it seems like the initial bloom has come off the rose out there in S-Bucks land. Remember, they're pricing in about a $2.50 move. So it doesn't seem like they're getting that right now. But again, we'll see what happens when they open up tomorrow. I also did allude to at the top of the show our poll that we put out at the beginning of the week, right before Monday's show, where we gave you the choices of 4 relatively unlikely things, some less than others, to pick from. We gave you the choice of and said which one is the most likely to happen. At the time, the Facebook straddle was right around $7.30. The VIX cash was at $17.20. Oh, seems like such a distant memory. And we asked you what's going to happen and what's the most likely to happen. VIX popping above 20 before the election, which of course we saw happen just a day or so after. Facebook beating the at-the-money straddle. Real Donald Trump, or Donald Trump there, winning the presidential election, or the Cubs winning the World Series. And VIX popping over 20, winning with about 42%. We had to kind of shut down the poll because obviously most of these things have now happened. So the VIX hit over 20 almost right, not that long after we posted this, probably about less than a day, less than 24 hours after. Facebook, of course, as we said on Wednesday, did indeed outperform its at-the-money straddle. So that 23% of you who picked that we're looking all right. 42%, though, we're leaning on the VIX. We said you guys were a little bit aggressive at the time on Monday. What the heck do we know? You guys were knocking it out of the park. Again, like I said, VIX cash pushing near the 23 level today. So, and then, of course, 21% saying Donald Trump was going to win. Interesting. Coming in last, which is surprising, were the Cubbies. Only 14% picking the Cubs to win the World Series. And what do you know? They go ahead and pull it off as well. So we kind of have tabled that poll because there's only one left that you can pick from, really, which makes it kind of interesting. That said, there still is a lot on the radar for the rest of the week. Of course, we are here in earnings season, and we said we have Starbucks after the bell today. Tomorrow, we have some names like some of the smaller ones like your Shutterstocks and your Humanas, and everyone loves Regeneron and a few others. So not as many big names coming out tomorrow, but still a lot of interesting stuff popping off in good old earnings. Let's turn our attention to the hinterlands of Maine. Mr. Rock Lobster, what are you keeping an eye on for the rest of this week into the weekend?
Just this goofy election thing. I mean, it's making things just sort of, drone on and drone on and drone on. And got 8 straight days down. Everything's down like, 0.25%, 0.5%. It just keeps winding its way lower. And I don't think it's going to, and to be honest, I don't think it's going to end until, it's not going to end until Monday. So, I mean, we might get a snap at some point, but it's just, I guess it's just what it is. And it's going to dominate everything until it is over, because I know almost everybody I talk to is really thrilled about this election. I don't know one person that says, woohoo, I'm so glad we're having an election. I just haven't heard that yet. Haven't heard it.
Yeah, these are not candidates that I think elicit a lot of woohoos from people. Maybe just or kind of resigned groans. Not a lot of the latter, unfortunately. We seem to be setting the bar lower every 4 years, so I'm kind of concerned for the old 2020, which sounds so far in the future, but the old 2020 election. But that said, Uncle Mike, what is on your radar for the rest of this week into the weekend?
Yeah, never in my years on this earth have I ever seen an election to where almost everyone that talks about the election concedes that they don't like their candidate, but they like their candidate better than, or that they can handle their candidate better than the other candidate. It's very unique. But anyway, what I'm seeing going into this weekend is we're entering into, we started this range of the, in SPY anyway, back in November of 2014 of, in the low areas of, the low 200s and the high areas of the 210. So we're kind of back into that range. We got out of that range back in July, but with the actions of this past week, we're kind of back into it. So I'm kind of concerned as a bull that if we go below the 200 level again, we kind of dipped below it for the Brexit, but that was just kind of a weird incident. But this is one to where we've been falling since summer. So a little bit of concern on my part as a bull. I am a diehard bull by all means, but I always do say long-term bullish, short-term cautious. So kind of curious to see what this range leads us to. And folks, I have a little bit of a trade that I'm working tomorrow, but after tomorrow, there's going to be a lot of dry powder in the St. Charles trading land going into Tuesday.
All right, everybody. That music means we've come to the end of yet another interesting sojourn through the world of options. We started off talking all things weird VIX and some funky earnings, and Uncle Mike wanting to buy Apple at 75, like everybody else on the planet, and a lot of interesting stuff. Moved on into some market share, then got in, some actual options volume compared to last year back in October. Not the most resounding of months, getting some UA and EA and a bunch of other names. The Qs, your polls, some money management tips, risk management tips from Uncle Mike, and then wrapping it up, looking at all things crazy in our U.S. election cycle. But that said, let's check back in really quickly with each of my cohorts here on the old All-Star panel. See what they have cooking this weekend and coming up next week that may interest you. Let's start with you, Uncle Mike. What's cooking in the land of all things going long RCM alts?
Well, a couple things. In lovely, sunny, scenic St. Charles, Illinois, Charlie Daniel Band is coming. I'm going to see him here in a couple hours. Excited about that. And also, if you are looking for a financial advisor who does appreciate option trading as well as the Charlie Daniels Band, give me a call, 312-212-3531, or shoot me an email at mtosaw@rcmfs.com.
People firing off questions in the chat. Unfortunately, we didn't have time for questions today, listeners. I'm sorry. But we'll get to this on Monday, your questions on Monday if you have. Monday's our big mail block time. So we make sure we have time for you then. Today we had to get into all things risk management and everything else. So, but we'll get to that on Monday. So if you got questions, keep firing them off. And Mr. Rock Lobster, what was cooking in the land of all things option pit?
We have our all things VIX and VIX ETPs. The vol ETPs, if you want to understand what all that stuff is. We have a Saturday class this Saturday. Go to optionpit.com and click on our event tab and sign up, and you will actually learn what all these things are, why are all these things are happening? Why is this?
There you go, listeners. Head on over to optionpit.com to sign up If you didn't get enough of the Rock Lobster today, then you can head on over there and get him all weekend long in your earlobes, which is always a fun prospect. Optionpit.com to learn more. And on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I wish you all a fun rest of the trading week. If you're in Chicago, go enjoy yourself. Tomorrow is indeed a local holiday. Should be a national one as well. But everyone, the market's going to be a little thin here tomorrow in Chicago, I believe, is everyone heading out to the parade. But we'll see you Monday for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.